Stop scrolling for a second. This matters more than today's price candle. So because what's happening right now with XRP is the kind of setup most people only recognize after it's already over. So this is not a hype moment. This is a pressure building moment. And those are the ones that change everything. So welcome back to the channel. If you are here, it tells me you're not looking for noise. You're looking for clarity. This channel exists to break down what's really happening in crypto before it becomes obvious to the masses. And today is one of those days where nothing looks dramatic on the surface, yet everything underneath is shifting. So XRP sitting around the $2 level is not accidental. So it's not random, and it's definitely not weakness. So that zone is a psychological and structural battlefield, a place where impatience exists and conviction quietly enters. So the longer price holds there, the more meaningful the text move becomes. So this is not about predicting a date or chasing excitement. This is about understanding positioning cycles and human behavior. Because markets don't reward emotion, they reward preparation. So let's zoom out and frame this properly, okay? So we are still operating in late cycle restrictive. So macro environment, interest rates have stayed elevated longer than most expected. Yes, liquidity has been drained, speculation has cooled, and retail enthusiasm has faded. So, and historically, this exact environment is where large capital begins to position. So quietly, patiently, without headlines. So let me tell you this, markets never move when everyone expects them to. So they move when positioning is asymmetric. So an XRP holding firm above $2 in this environment is not a red flag. So it's a signal. It suggests that the heavy distribution phase is behind us and accumulation is taking its place. So institutions do not chase green candles. So they build during boredom. They build when volatility is compressed, when narratives are quiet, and when attention is elsewhere. So that's what real accumulation looks like. And that's exactly what this phase represents. So technically, XRP has been locked in a prolonged range for longer than the average retail investor can tolerate. That's not a flaw in the setup. So that is the filter. Emotional capital exists first. So patient capital remains, but the most important detail isn't the range itself. So it's who is active inside it. So on-chain and demand data constantly show large holders accumulating at scale, not thousands, not millions. We are talking about positions measured in hundreds of millions. Yes, and billions in notional value. That kind of capital doesn't react. It engineers outcomes. Markers exist for this reason. So their role is to stabilize price, suppress volatility, and allow size to move without revealing intent. So the longer price stays pinned, the more inventory they can build. So this is why XRP looks uneventful right before it doesn't. And this isn't theoretical. We've seen this pattern before. In previous cycles, XRP spent extended periods doing absolutely nothing. Sideways price, growing frustration, declining interest, then suddenly, without warning, price reprice. So until in a short window of time. And always happened faster than most people were emotionally prepared for it. So one of the hardest lessons in marketers is this: the real move begins when people stop watching. So go back to 2009-17, XRP had already made the early move. So many believed the opportunity was gone. Those who bought under a penny felt they'd already won. When the price reached 20 cents, then came the shakeout, fear, volatility, capitulation, and then almost instantly XRP delivered one of the most explosive percentage gains this market has ever seen. moving from fractions of $1 to nearly $4. That wasn't luck. That was positioning. Small early investments turned into life-changing outcomes, not because of hype, but because of patience paired with asymmetric exposure. And most people miss it, not because they misunderstood fundamentals, but because sentiment broke them. Sentiment is where markets exact the highest tool, and that hasn't changed. So what has changed is the backdrop. Today, the fundamentals surrounding XRP are stronger than ever. So the world is actively transitioning towards tokenization, not as a concept, but as implementation. So bonds, treasuries, real world assets, equity settlement systems, even global institutions like central banks, the BIC and the IMF are aligning around distributed larger infrastructure. So domestic instant payments are already live. Cross-border settlement systems are being rebuilt. Legacy rails simply cannot handle the speed, cost, and efficiency demands of a digital economy. XRP sits directly at that intersection. So the XRP wasn't built for speculation. It was built for value transfer, near instant settlement, high through output. So deterministic finality, minimal cost, real utility. You can tokenize nearly anything on it. Not because of marketing, but because of design. That's why fundamentals matter more than daily price action. So price reflects emotion, infrastructure reflects reality. So retail focuses on candles because candles are visible. Institutions focus on reals because reals endure. And this is where psychology becomes critical. Most investors believe they are rational until reality test them. When XRP briefly dropped into the low $1 range, settlement collapsed instantly, fear spiked, confidence evaporated, yet within hours, price snapped back aggressively. That snapback wasn't random. It was a transfer of liquidity. Weak hands excited. So strong hands absorbed. That moment was not a failure. It was rehearsal. So markets reveal strength during panic, not during release. And XRP passed that test. So now combine everything. Technical show long-term compression near a structural apex. Fundamentals show expanding real-world relevance. Sentiment remains skeptical, fatigued, and distracted. That combination is rare and powerful. So looking ahead, the micro landscape between now and early 2026 is likely to change dramatically. Rates will eventually fail, liquidity will return, risk assets will reprice. So fiat purchasing power will continue to erode. In those environments, assets with fixed supply and real utility outperform. So XRP isn't competing for attention. It's positioning for necessity. So most wallets still hold a relatively small amount of XRP. So the holder distribution remains steep. Being in the top percentage of holders requires far less than most people assume. That alone tells you adoption is still early, not late. When repricing finally happens, the same questions always surface. How did you know? Why didn't you tell me? The truth is always uncomfortable. The information was available. The conviction was optional. This isn't about convincing anyone. It's about preparation. You don't build conviction to the top. You build it during boredom, doubt, and frustration. So that's where we are now. The investors who remain calm in this phase are the ones who benefit when the system turns on. This isn't a trade, it's positioning. And positioning always feels uncomfortable before it feels obvious. So XRP doesn't need belief, it needs time. And time is exactly what patient capital has. So if this breakdown added value for you, make sure to like the video and subscribe. I'll see you in the next one.